And good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Monday, April 29th, 2024. And I just want to kind of talk a little bit about a lot of the comments that came in over the weekend and my responses to them. And I want to make sure that I just kind of go over that, excuse me, and that you can actually hear me versus reading something and believing one side of my voice or the other. So I am going to begin with the S&P 500, and I'm starting on the hourly chart, and I'm actually going to go over very quickly both counts. And what I'm going to be doing at the same time is demonstrating that someone made a comment at the predictability of Elliott wave. And I want to make it clear that the predictability of Elliott wave is truly based on what the market is telling us. It isn't that we then tell the market, or then an Elliottician or an Elliott wave analyst tells the market what it needs to be doing. It's the other way around. And based on the interpretation of the different patterns that are created by the market, then it has some predictability factor in terms of I can give you two scenarios. And one is preferred and the other one is normally considered an alternate count. And the way that I was taught was that you always, and an Elliott wave analyst will always have an alternate count. Why? Because it's the market that tells us. I do not tell the market. It tells me. And now there's a lot of factors involved, and now there's a lot of stuff going on that really are giving us the exact situation that we're getting. So after today, I'm going to present here in the futures market what I'm running, and that is the more bullish. And under that count, the market still has not broken to negate the alternate, which I'm going to do again, that's on the SPX. So we are still in the same position, but I'm going to talk to you right now. I'm in the S&P on what happened today and how that does continue to sit within the possibility that the market will go up and make a new all-time high again as it finishes that primary B wave. So what's really at hand right now is, will the market go up and make another or an additional all-time high? And here in the S&P, that's above 5,333. Then that would complete that primary B wave. And we still will come down in a primary C wave. That would be the expectation, the predictability that we would come down in a primary C wave, which would then complete a cycle fourth wave sometime 2024, 2025. And then we go again in a cycle fifth wave up, which will be dynamic, which will be building, which will be pretty much a lot of vertical moves, etc., as we would expect. Now we're in the final, I believe, the final advance, if it's what's coming through, of an advance that began off of the October 2022 lows. So it's getting a little long in the tooth in terms of like not having a major or a longer term setback or a corrective nature. So it's been pretty straightforward in that the advance has been healthy, but it is still in a position that suggests that that health is not necessarily reflection of reality, of what's happening all around the market. Sure enough, there's plenty of money, and that money is sitting in this market, in these markets. And there's a lot of money trading, and it's all changing hands, and it's moving quick. But back to my point, the predictability of the market is going to be dependent on what actually that market tells us and then its reaction. So, right, remember, Elliott wave is human emotional reactions. If the human emotional reactions are like, okay, we're excited, in today's case, about Tesla. So what does Tesla do? It ends up going up almost $26. And there were periods during today where it was up, I think, 197, almost 198, heading for 200. And it did it on huge volume. So there's a lot of interest suddenly in trading Tesla. But you know what? The news that they gave was that the autopilot program might be reinstituted and being allowed to sell in China. Suddenly that's worth $26 to the price of the stock. I don't know. But the market traded it. But when you looked at the options, it's a premium game, ladies and gentlemen, premium. So again, options flows is what produced the strength in the rally because a lot of people buying calls. They may have been buying puts, and each one of those is like, so, the dealers on either side, if they're the seller of the call or the buyer of the put, boom, you're buying the stock. So it is a self-fulfilling prophecy in terms of that respect. But what does it tell us for the larger picture here? What does it tell me about what could come tomorrow? So I can get to that quickly by saying, if indeed we did complete on April the 19th, the minor fourth wave, which to the commenter that suggested that's where this wave 4 began or ended and minor wave 5 began, I agree. I agree. Now, here's the catch. It needs to get above 5,192. So right now I've got where it's like, okay, we got an ABC for wave 1, and that's under the premise that that's the way it's kind of shaping up. And that would suggest that we're coming into a diagonal fifth wave. Now, I'm kind of looking like, okay, am I jumping the gun on that? But that's what, in my opinion, this would kind of have to turn into. So if that's the case, wave 1, the minute wave 1 of minor wave 5 is still in action because we've got the A, the B, and the C, I believe, is not done. No matter what I'm going to call it, I believe that this pattern still needs one additional push higher. When we work out our resistance levels, that higher comes out at 51.87.5. Now that could be enough resistance to, and we could actually take it, the resistance up to 52.12, 52.15, and give it a lot of room to kind of continue, still be a wave 1. So it would be an ABC, and that would be, and we'd have to work it to be a 5.35, and I had to take it down to the 15-minute to get this to be a 5, and this to be a 3, and this to be then a 5 as well, which is still in action. So that would finish wave 1, and then we get a 3-wave decline. Then we get a wave 3, which will also be an ABC, and it's going to be a diagonal. And so ultimately, if all goes to plan, we'd minimally looking for a high at 53, 67, 68 up into that area. But more than likely, we have the potential to get to 56, 15, 17, 20 up here, or anywhere in between, to be honest with you. And it would be a 1, a 2, a 3, a 4, and a 5. And then it's done, and then we come off yet again. Now, that would have to be kind of in a hurry, but we have seen the month of May. We have seen where it goes contra, so you get a little bit of a right-hand translation, and it just stays bullish. And the cycles all kind of fall out of sequence a little bit, and it's all in support, but it doesn't change that longer-term view. Back to today. So as far as I can go is that, okay, the bullish one, yep, it's still alive. And it would just be completing, potentially, a minute first wave, and then we get a minute second wave, and then we get another rally. Now, SPX, that's the one that's still carrying that other count, and you're going to see it has not invalidated itself yet. In order to do that, where we were be going up in this area would be a fourth wave, a minute fourth wave with a fifth wave down still to come to produce minor wave 1 down, with this high at 53, actually, what is that? 52.64 basis to cash would be the completion point. And above that, we have primary B up here somewhere. And we have 1, 2, 1, 2, 3, 4, 5, 3, ABC 4. And I want to tell you, gap, gap. This leaves this kind of like islandish a little bit. This leaves this a little bit islandish, unless we can go up and then work our way back down. But we had gaps here. And that's interesting to me in the cash market. So, a lot to watch. So, and here is this an A, a B, and a C. All right. And if it is do we still need just a little bit more? And I could run the same deal. I'm just going to put for an ABC 5126. You see it just the same. So both a little bit more to complete this particular move. And then this would change a little bit. And we will put it up here and you change your numbers to the downside. So both remain alive. It is not Elliott wave. It is the market. And this is all setting itself up very cleanly. We have the moving averages being very supportive right now. And the 50, kind of giving a little kiss and go here today. On the 4-hour chart, the 4-hour 50 gave it a kiss, rallied strongly right off of it, leaving this as an ABC. So we need one more high. And both counts continue to run side by side. All right, over in the NASDAQ, it kind of is the same story. Let's start with the NQ. The futures market, same deal. I am looking as if we finished a minor third wave up at that high at 18,709, and then we've come down in a minor fourth wave, open this up, minor four, and now we are working on a minor fifth wave up. Bullish. Okay, where are we within that? We've not given total validation to the fact that it's underway. We need to get above 18,055. We're getting there. We're getting there. Now, same deal that I feel that the NASDAQ as well is doing a BC for a minute wave one, and then ultimately minor wave 5 will be a diagonal triangle, which is very typical of the size of this particular rally phase that we've been in, and how it's going to just diagonal straight up to a pinnacle, because it just absolutely has to. And it would be very appropriate for this kind of move to finish in this fashion. Now, where can it go? Well, initially, again, this would be for the minor 5. We've got 618 at 18,369. Well, that's not going to work because we wanted to take out that high at 18,709. So that would suggest that we got to go further. 100% more likely, 19,146. That's basis the June contract right now. So got still, it can get there. That would be the plan. But we're gonna, if we do it in a diagonal, I need to get this C wave and put a 1 there, and then I've got my upper boundary. And then I need a wave 2, and that'll help me start a lower boundary so that we can get some limitations to what direction and how this can go. And is it going to finish up in here? Is it going to get to here, or does it go further? So what could upset that? Well, there's many things, and the NDX is leaving that open, just as the NQ is. Same index, same stocks. But you can see with even Tesla, which, by the way, I'm sure it was more, Tesla traded 242 million shares today, 242 million shares. And basically, not a really screaming day in terms of volumes. But Tesla, off the chart volume. And got as high as 198.87. And so I believe 200 is going to happen in Tesla. And I think for Friday. And then maybe that'll be it. And then they'll do a number on Tesla. I don't know. But coming back to the NASDAQ, very strong day in Tesla. And a lot to trade, by the way. It's called a premium game. Now, What can we look for? I think that if we are in the C wave coming up to finish this minute wave one, we need an additional high. What do we have sitting above on the 4-hour chart? Well, we got the 4-hour 200 sitting right at 17,990, right? Because that's kind of the same thing. Actually, 17,989. And then we have 100% resistance for where C we equal A at 17,990. Well, I like both of those. Pretty clean. Maybe a little bit above. So, and we did the same thing where we came down. If I break this down and we take a look at the hourly chart, this kind of came down as an ABC. So I'm thinking, wow, okay, so we get a 1, 2, 3 or a 1, and this is a 2, and we got a lot more to go in terms of the ABC. Or we've done maybe wave 1, wave 2, and this is still part of 3. 1 of 3, 2 of 3, 3 of 3, and we do end up somewhere up in here. Tomorrow. Now, don't forget, we also have, before the market opens, we have PayPal. Then we have AMD and Amazon after market tomorrow. So can the market do it? Sure. And that would be a more bullish picture. But it's the market that tells us. I don't tell the market. We can't. Otherwise, boy, why would we need to trade? We would just put the order out there and say, yep, you're going to come and take that. And here it is. Here's the covers over here. So please just hit it now. Right? Doesn't work. Okay. So in the futures market, minor 4, minute wave 1, minute wave 2, minute 3, 4, and 5. And I'm telling you, when you start to look, you go like 19,146. Well, if this can get up to 18,300, what? And still be wave 1. So upside potential can get strong. And by the way, on the way up to this level, it would most certainly knock out this next view that I'm going to talk about in the cash market. Because what does the cash market need to do? It needs to get itself above 18,002. That's that low, 18,002. So we've got resistance, but 18,002, this count becomes invalidated and it's gone. And then we only have one left. And that will be the one I just showed you in the futures market. But here again, like we saw over in the NASDAQ, in the S&P, we had two gaps here. One was a gap going into last week, to Thursday, Wednesday to Thursday, and the other was the gap Friday to Monday. Not as big, but still a gap nonetheless. And didn't look like it was really going to hang on, but it did, and it did well. Now these, this, look at that. It was a beautiful tradable, but they turned it and just bought it and bought it and bought it, and then the bell rang and they continued to buy it. So once again, potential for some additional, before I got to put the 4 there, right? Could 618 for wave 4, we're already pushing the limitations, and that's 17,831. 100% for where wave C would equal A, 17,852. Okay. We've gone this far. I would let it go. 17,877 starts to tell me, actually, it's going to be 75, 76. I'm like, well, I don't know. I'm going to begin to question, because then I'm going to definitely be looking like it should be able to get up to here, which is 18,002. So I think, again, as I said in the S&P, we are still at that point where it's like the market is going to invalidate one or the other. And it is going to be news driven. And we have plenty of that coming between tomorrow, Wednesday, and Thursday. Wednesday being big. Now, tomorrow being big. Okay. So in the cash market, same deal, a little bit higher. Then we start the minute wave 5 down. right? If it comes up here and I stick a 4 on it, it starts to come down. What am I going to be looking for? The opposite of the upside. It needs to start coming down as quick as it went up. What could do that? Well, Tesla, they decide that was it. It was going to go to 200 and they kill it afterwards. Or Amazon's earnings, poop on a rope or whatever you want to call it. And it's just like dope on a rope. How about that? And it just kind of like comes down and bam. So the market tells us, Elliott doesn't tell. I, as the Elliott analyst, I do. At times, I wish I could like, have you guys read the memo? But I know better by now. All right. Before this becomes too long, I hope I've made it understandable is that my preference is that the market let me know and then I can trade. Now, one last thing that I'm going to add, and I'm sticking it on here at the end. So if you have an interest, you'll listen. That also was proposed to me, do I have a paid version of my analysis that would be more definitive in moves? And I want to say yes, I do analysis and I do for personal. So I have clients that they ask for the analysis. And so it would include analysis on, in this case, you get the NDX, the NQ. So you can pick a market, but then you also get the ETFs and therefore can determine trades based on that. And those trades would likely be on options and the options would deal on a different basis. In terms of you become more, you'd be looking to sell premium. You'd be looking to capture the move, whether it was up or down, but via options. And there are ways to do that. So yes, I would, that is available. And if you have an interest in that, you can drop me a note at michael@mjf1partners.com. That's my email address. And just state your interest and I will get back to you. All right, that's going to be it for today. Again, tomorrow, in terms of economic data, we do have some. Employment Cost Index, Case-Schiller Home Price, Chicago Business Barometer. So 8:30 a.m. Employment Cost Index, 9 a.m. Case-Schiller, 9:45 Chicago Business Barometer, 10 a.m. Consumer Confidence. None of them are really shaky, except possibly Employment Cost Index may throw a jolt. Wednesday's ADP employment, Thursday initial jobless claims, and Friday employment report. So this is employment week. So we could get a little bump from employment cost index. Depends on how the market wants to interpret it. All right. And then also tomorrow, PayPal before the market, AMD, Amazon after the market. Have a great evening. Next update will be on Tuesday, April the 30th.